Hi friends, so we have a new business idea today. Breaking up real estate and tokenizing it for sale. Will that free up value? Let us see. Starting with the customary ICO details, ERC20 tokens at a sale price equal to 0.00001 Ether. They are targeting 15 million US dollars with a soft cap of 1 million US dollars and a hard cap of 30 million US dollars. Private pre-sale is currently on and the crowd sale is likely to happen from May 1st to May 31st, 2018. Now looking at the traditional real estate business, taking the points from Alt.Estate white paper itself. There is a high threshold for entry, lack of liquidity, and of course ownership transfer process, potential price transparency issues, risk of frauds, transactional costs, and complications in cross-border transactions. All this makes the overall market extremely inefficient and gets many potential investors to stay away. So what does Alt.Estate propose? Split into smaller units and tokenize. Taking a look at how this works. A potential investor sitting in say China browses through the property listings and likes a piece of property in US but cannot invest the required 216,000 US dollars. What does she do? She picks up small units, that is square meters, of the property in token form and buys them as an investment. Simple, isn't it? Now, how is this platform supposed to work in real life? Let's look at a simplified version of the overall process. Alt.Estate Group first sells a lot of alt tokens to retail investors through crowd sale, thereby creating alt token holders in the market. Now there's a property owner in the market who wants to raise some funds on his property. The owner lists the property on Alt.Estate platform and tokenizes it, generating a unique property-specific SQM token, and of course, pays the fees to Alt.Estate. Once tokenized, all token holders can now purchase these property-specific SQM tokens against alt tokens, again paying a fee, this time a transaction fee to Alt.Estate. And of course, both the property owner and the alt token holders can trade their altcoins on an exchange to get fiat currency or any other cryptocurrency if they want. So what benefits does this platform impart which are not there in traditional real estate? Access to real estate investment through cryptocurrency. Not exactly a differentiator. I don't think anyone can stop you from accepting cryptos as payments as long as you pay the required government taxes at the market rates. May be true for certain markets though. New diversification opportunities between crypto and fiat exposure. This is true to some extent if you're bullish on real estate or consider it a safe investment. Again, not a major differentiator. Decreased minimum investment threshold. Now this is a major advantage, which can potentially bring a fair bit of new investors into the space. Higher liquidity and price transparency. This again is a real benefit. It should help in price discovery as well as property disposal. Enabling cross-border transactions. A no-brainer, as this should increase global demand and liquidity across markets can be used to generate real estate demand. Can potentially generate a real estate boom or maybe a real estate bubble. Blockchain to eliminate fraud. Well, an oft-repeated benefit of blockchain. Can't argue for or against it. Token distribution and allocation of funds. Nothing much to say on token allocation. Use of proceeds also seems mostly on expected lines, with marketing garnering a lion's share of the proceeds, though I feel it is neglecting non-digital as an effective medium. Legal expenses are on expected lines owing to real estate model. 20% of overheads seem fairly high though in the current model. Predicting the price. Unfortunately, there isn't much background data to go by to estimate the real cash flows or turnover for either the platform or the group. But as long as we can assume that the business model is viable for Alt.Estate, our interest would be more on the token price and viability from an investor perspective. Let's see how we can predict alt price then. Since we don't know as of now how many tokens are there, we start with the hard cap and 60% allocation to the token generation event, assuming USD 500 as the average Ether price to get 30 million USD, coming out with an expected supply of around 10 billion altcoins. Now we know that Alt.Estate has targeted a 4 billion transaction turnover in 3 years. Since this is without much basis, we'll base our figures to start with a more modest 100 million USD turnover first, assuming that part of the token in circulation are hoarded or lie in the exchanges for speculation, and that up to 75% of tokens will be reused in transactions. We can come out with multiple scenarios leading to different fair price of the token, starting from 0.000011 Ether to 0.000023 Ethers. Assuming the turnover as 500 million USD, the range now changes to 0.000057 to 0.000114 Ethers. And finally taking the projected turnover of 4 billion USD, the range is now 0.00457 to 0.000914 Ethers. From a realistic perspective though, assuming speculation hoarding at a conservative 25% and taking top end of the turnover at 4 billion and bottom end at 100 million, we come out with a range from 0.000015 to 0.000610 Ethers. I will prefer to stick to the lower end if I am trying to take a stance though. Looking at the roadmap, they seem to have planned it out well, with the first point of interest being the beta platform release in Q2 2018. The next, of course, is the start of the token trading in Q4 2018, followed by the protocol going live in Q2 2019. Though a bit far-fetched, but if they can turn their protocol into an industry standard by 2020, then it's mooning, of course. Looking at the final checklist, the idea is great, revenue model is good. Token ROI will probably be somewhere in the medium to high range. Readiness levels look medium. Risk seems medium as well. Ability to execute seems okay, though it's always a question mark. And most likely, it's a genuine ICO. What works for them are good business model, breaking a property into smaller units, which should ideally release value, raising the stakes. Scope for cross-border investment should ensure liquidity can move from across the globe, and overall, potentially a good token ROI at higher end and decent one at the lower end. What doesn't work for them, on the other hand, is real estate market in general. Economic cycles have huge impact on real estate, and the assets tend to stay stagnated for extended periods. Then there's no clear-cut basis for revenue and turnover numbers, as well as no clear competition analysis for new offerings using the same concept. Finally, how will listings across multiple platforms be handled? Overall investment grade is B+. I love the concept and would have surely put in an A here had I seen a model of predicting the revenue and turnover. Thanks for reaching here. If you think the review was useful, please do like the video and share. Thank you.